This is the Net Group Investments Insights Podcast, where one or more of our experts explore a variety of views and insights that investors care about.
Hello, I'm Trevor Garvin from Net Group Investments Multi-Manager. Welcome to this week's Market and Economic Wrap, entitled Boom or Bust, What Will Trump's Big Beautiful Bill Deliver Over Time? As always, we have had several interesting events and announcements in just the last 48 hours. Proteas cricket captain Wiaan Mulder achieved a new South African Test record of 367 not out against Zimbabwe, surpassing Hashim Amla's previous highest innings total of 311. We also saw F1 driver Lando Norris win for the first time his home British Grand Prix this past weekend. Elon Musk, the richest man in the world, announced the formation of a new political party in the United States, named the America Party. This was in reaction to the new Big Beautiful Bill that got passed and signed into law by President Trump on July the 4th. In reaction, Tesla shares fell a further 8% yesterday. The market's reaction to their fear that Musk will no longer have his attention focused on the Tesla business. We watch this space with interest. President Donald Trump has once again delayed the sweeping import tax hikes he has threatened to impose on imports from nearly every single country by extending a Wednesday, the 9th of July deadline to August the 1st, while he continues to push for foreign nations to enter into trade negotiations with him and his administration. The White House press secretary communicated to reporters that Trump would sign an executive order today delaying the new taxes by 3.5 weeks, along with letters to a dozen foreign leaders threatening specific import tax rates unless countries take as yet unspecified actions to reduce their trade deficits. Trump also announced that he will be imposing tariffs of 30% against all South African goods as from the 1st of August, showing that very little was achieved by President Ramaphosa's visit to Washington last month. The rand weakened marginally overnight, having reached 17 rand 73 cents at 5 p.m. yesterday, a weakening of around about 0.8%. However, by 6 o'clock this morning, it had recovered to 17.79, suggesting that markets had mostly priced in a resumption of tariffs ahead of Trump's initial July the 9th deadline. The rand is still weaker than the recent strength of last week, when it traded at 17 rand 51 to the dollar. Trade experts warned the tariffs could have far-reaching consequences for the country's automotive, wine, citrus, and mining sectors, all key exports to the US markets. Turning to investment markets, local equities benefit from positive global sentiment last week, with the JSE All Share closing at a record high of 97,300 last week. Basic materials recorded the strongest gains, boosted by higher metal prices and more than reversing the previous week's losses. US markets closed on Friday for Independence Day holiday, set new record highs on positive sentiment that the extension of the Trump administration's tax cuts will support corporate earnings. The passing of the Trump administration's Big Beautiful Tax Bill through Congress buoyed market sentiment, with the tax cuts for high-income earners and corporations expected to boost spending and investment. The bill also expands spending on the military and border controls. The Budget Office of the U.S. Congress has estimated that the tax cuts and higher spending may widen the budget deficit and add $3.4 trillion to federal debt over the next 10 years. In the bond market, the benchmark South African 10-year Treasury yield has dropped to 9.75% from 9.96%, in line with the firmer currency and improved inflation expectations. The US 10-year Treasury yield has risen to 4.34% as the passage of the Trump administration's tax bill stoked concerns about that federal debt rising over the next 10 years. Key US data showed that the labor market remained firmer than market forecasts. Underlying inflation remained sticky above the Fed's 2% target. Non-farm payrolls rose to 147,000 in June, easing the unemployment rate to 4.1% from 4.2%. It will be interesting to see how markets react over the coming weeks as each country's tariffs level are digested. Patience will be required to ride this period out. Till next time, with thanks, Trevor.
This podcast is for marketing purposes only. The information contained in the podcast or video was for information purposes and does not constitute advice, recommendation, or an offer or solicitation to purchase or sell any funds or strategies to any person in any jurisdiction in which the offer, recommendation, or solicitation to purchase would be unlawful.